you never want to sell an appreciating asset because Bitcoin's appreciating at probably 50% compounded annually at this rate. If you can borrow at 5% against your Bitcoin, one, you don't pay the taxable consequences of selling your Bitcoin, and two, you don't lose the upside to your Bitcoin, right? And one thing is also more psychologically, something that a lot of our users have told me is that because they borrowed against their Bitcoin and they didn't sell and they used Lava to, fund the purchase they wanted, they were actually happy, or like even psychologically, because they were still exposed to Bitcoin's upside. And they said if they hadn't done that, they would have felt a little bit salty that, oh, like I sold my Bitcoin, now Bitcoin's going up. I'm like not feeling as aligned with Bitcoin's success.
All right. What's up, everybody? Welcome back to the Built on Bitcoin podcast. I got a repeat guest today, Shehzan. How are you, my guy? How you doing?
I'm doing great. I mean, it's always good to talk to you. For the audience that doesn't know, like Jacob and I met you and we've been friends, and he's a angel investor in Lava. And it's been great to see all the success you've had over the coming years. It's like super inspiring for me to see.
Likewise, bro. Likewise. I don't know if do you remember we met in Miami? I think it was 2022.
I'm so happy we met. Like we were just there at I think some party, and I was talking to you, and yeah, it's been like crazy to see all the success you've had since then.
Totally, bro. A lot to talk about. I'll preface for people listening by saying that I think for this episode, there's a lot going on. You had a big announcement on Monday, which we'll discuss. You dropped a new super dope product and you announced a fat raise. At the same time, there's been a lot of kind of chatter on the timeline about different things. And so I think the way I want to ease into this is I want to talk about, first of all, our last chat was in July of 2024. And me being early back then, the reason I got you on is because you did this thing called Lava Smart Key, which I was like, okay, no more seed phrases. I like that because I don't think my grandma wants a seed phrase. And so we mostly chatted about Smart Key, and you had two other features at the time. You had an on and off ramp you built, and then you had like this thing called Lava Pay to kind of send digital dollars, but no loans, which you're like most known for now. So a lot has happened. So maybe just to preface, it's been a year and some change since we last chatted, and you didn't have loans. What have you guys done since we last chatted?
I mean, I've been building Lava for years now, and the problem that I am trying to solve, I've always been laser focused on the same problem, which to me is that I believe Bitcoin is the best savings asset. I think that the world needs Bitcoin. It needs an easy way to save. I think over the next few years, we're going to see a lot of technology progress. And if you aren't saving in sound money, you won't be able to benefit from it. And what we want to enable at Lava is, for Bitcoiners, for people that are saving in Bitcoin, we want to be the best place for them to actually use and manage their Bitcoin and be the best Bitcoin wealth management platform. And in that, also be the safest way for people to manage and use their Bitcoin. So everything I've done over the last, few years, I've been in Bitcoin for more than a decade now, has been to kind of progress towards that goal. I think the start of using Bitcoin is never selling your Bitcoin, and borrowing and accessing liquidity against your Bitcoin is the fundamental product that enables you to manage and leverage your Bitcoin wealth to still improve your quality of life, right? So Lava has always been kind of really hyper focused on this one vision. The way I kind of measure my KPI with Lava is you should have more Bitcoin because you use Lava versus you didn't, right? So if you really believe in a world where finance, I think that we want to show people a path towards financial freedom that's through saving and not gambling. I think everyone is trying to push you to gamble today and hyper financialize the entire world. And we want to show this path that financial freedom can be accessed through saving. And if you believe Bitcoin is saving, that Bitcoin is the foundation of your path to financial freedom. And we want to be the platform that you use to do anything you need to do with Bitcoin. So over the last few years, we've done a lot to really, make it really secure to do money movement with Bitcoin. We can kind of discuss that as well and the learnings we've had. We've done a lot to make it easy for people to borrow against their Bitcoin. That's been like our real focus. And we work with capital providers around the world. In the US, not in the US, we enabled a retail to lend against their Bitcoin. We can kind of discuss these products that we've launched in whatever, sequence that you want. But we've done a lot to just really build out this future of Bitcoin finance. And now today, if you are using Lava, there's a lot of things you can do that you weren't able to do a year and a half ago. So one, you can get paid in Bitcoin. So we create this Bitcoin bank account that, you know, you can basically go to your employer software like a Rippling or Gusto. It's a bank account. Your employer doesn't know you're getting paid in Bitcoin, but anytime you send money there with no fees, you just get Bitcoin in your Lava account. So it's a way to kind of stack Bitcoin. Your employer doesn't have to pay you in Bitcoin, but you do get paid in Bitcoin. They never know. Now you can borrow against your Bitcoin with Lava. We can discuss the line of credit, which is the most flexible, safe, easy, and lowest cost way to borrow against your Bitcoin. Then you can go take your cash that you've borrowed against your Bitcoin and just spend it directly from Lava or withdraw it to your bank account. So your merchant and whatever you're using to wherever you're spending doesn't have to know that you've been using your Bitcoin to fund those purchases. Your employer doesn't need to know that you've been getting paid in Bitcoin, but you're living on the Bitcoin standard and you're never selling your Bitcoin. And that's all the stuff that we do is trying to make this reality possible.
Simple mission, hard to execute. I mean, the tagline was always, saving Bitcoin, spending dollars. And I love the tagline of we want you to end up with more BTC if you're using us. That's been my mentality as I'm trying to move off of fiat to get more into a Bitcoin standard. And you guys have definitely helped there. I want to dive into the product in a second, but I want to first touch on the fundraise. Because first of all, it's kind of a gangster way to announce it because you did like, we raised 200 million and we did this and we did this and here's a bunch of other stuff that's not related to the fundraise. It was just like 3 words. And I was like, that's the most gangster way ever to do a $200 million raise. So first of all, tell us about that because that's an insane stat, especially kind of in this market where you're not seeing a ton of VC stuff happening.
Well, actually, since you and I last spoke, we've raised money, right? So I
Yep.
mean, we can kind of talk about some of our investors. We raised a mix of venture and debt. So we raised from Coastal Ventures and Founders Fund. So Lava is pretty unique in that I think we're the only like Bitcoin or the kind of crypto company. I mean, we're the only Bitcoin company that's raised from Coastal Ventures. So they're like this fintech VC. They've invested in they invest in everything. They're not just the fintech we see, but they've invested in some of the most famous fintechs like Square, Ramp, Avon, Firm, a bunch of other ones over the last decade. And, for me, my goal with Lava is that we always have wanted to be seen more as a fintech platform. One, we didn't want to really associate ourselves with the rest of crypto because we're Bitcoin only. And two, we want to be seen as like this like financial institution, right? That's Bitcoin first, that's Bitcoin only. And, working with them has been really great. We work with the best fintech investor in the world there, Keith Roy, who was at PayPal early days, seeded Ramp, seeded Affirm, seeded Open Door, Avon, all sorts of other companies. So we were closely there. And then we also work with Founders Fund, Peter Thiel's fund and all the great partners there. And then we've raised since then from a bunch of people. So we've had like a lot of financing, as you know, that has helped us grow. So you're an investor, Anthony Pompliano, Eric Jackson from Open Door, Alex Cornagli, the soccer player. So, I mean, there's a bunch of people we've raised from. I guess people might ask us, why do we raise? The loans on Lava, they're funded by people on the other side too, right? We have this like yield product where people around the world can kind of deposit stable coins, earn a yield. And that product is very special because it is the only way that you can earn a yield on your stable coins or cash, but only by lending against Bitcoin. Because every other product in the space kind of requires you to take some other altcoin risk as collateral, or there's like some weird like financial engineering going on, like the basis trade or something else. This is like very simple to understand. You have cash, you're lending it, it's always over collateralized by Bitcoin, and you're capturing that yield. And it's similar to what like banks do with their money. You give them cash, they lend it, except banks take literally 99.7% for themselves. We just give that back to you. So that is a large part of how loans are funded on Lava, is that people on the other side who actually just aren't all in on Bitcoin because, they have maybe some sensitivity to the short-term volatility of Bitcoin. They still have some cash, they want to earn a yield on it. That's how the majority of loans are funded. But we always want to make sure that there's never an asset liability mismatch on Lava. So that's why we raise these credit lines, so that if there are some withdrawals from that product, because we allow instant withdrawals, we need to plan for it never being in an asset liability mismatch. And that's what the credit lines are for. And then the venture funding really for us is to invest in our team, payroll, infrastructure, and marketing and growth. I actually haven't done any marketing yet. So it's all just been, just building it, investing in the product so far.
Love it, dude. Love it. All right, I want to get into product, but kind of in a roundabout way, because you mentioned Pomp's an investor now, and you were just on the Pomp podcast.
He's great. He's like a legend.
Dude, he is a beast. I love his hustle. He's doing so many things.
He took a meeting with me on Labor Day. think about that. Like he's so successful and he's like taking a meeting with me on Labor Day, right? He works all the time. He's so easy to get in touch with. And dude is, even given his success, I'm super impressed.
Huge. I watched part of it, and one of the things he brought up was this idea of buy, borrow, die, which some of us know about in kind of like it's like the billionaire thing that people do. Like Bezos does this with Amazon stock, and that's how he funds himself. And for most of us who are pre-rich, we don't really know how this works. So first, to get into some of the products in a roundabout way, can you break down what this means of the buy, borrow, die, and how it works practically?
You never want to sell an appreciating asset because Bitcoin's appreciating at probably 50% compounded annually at this rate. If you can borrow at 5% against your Bitcoin, one, you don't pay the taxable consequences of selling your Bitcoin. And two, you don't lose the upside to your Bitcoin, right? And one thing is also more psychologically, something that a lot of our users have told me is that because they borrowed against their Bitcoin and they didn't sell and they used Lava to, fund the purchase they wanted, they were actually happy or like even psychologically because they were still exposed to Bitcoin's upside. And they said if they hadn't done that, they would have felt a little bit salty that, oh, like I sold my Bitcoin, now Bitcoin's going up. I'm like not feeling as aligned with Bitcoin's success. So I think there's a lot of reasons to never sell an appreciating asset, even not in the Bitcoin space, in just general finance. People with equities or real estate, what they do is they just hold on to their appreciating asset and get a line of credit against it to really make the purchases that they want. That way they can kind of, defer any taxable consequences and they can keep the upside and they can kind of capture that arb between their interest rate and between the rate of appreciation on their asset, right? So Bitcoin is probably actually very interesting right now because it is the largest asset by my data that is not tapped into right now. Like the amount of liquidity that is like being borrowed against Bitcoin, relative to its market cap is way lower than any other asset class.
Mm.
So I think it is a very unique opportunity. I think that there's a lot of reasons for this. One is that Bitcoin's still early. It's only been like 15 years or 17 years since Satoshi even released a white paper, right? So it's not been that long since Bitcoin really even started. It's probably the most unique asset that this world has really ever seen. It's like the first, digital currency, right? So I think there's a lot of reasons why there hasn't been more lending volume against Bitcoin, but that is changing as Bitcoin becomes more liquid. I think for that, I think a lot of it was after Bitcoin crossed 100K. I really do think that was when people started thinking, okay, how do I now start using my Bitcoin to make my life better, right? And so I can also share some stories about how people have done that using Lava, over the last year or more. So we've actually it's been really interesting. So we didn't know what use cases people were going to use us for when we started doing loans. But the most fascinating thing is how varied the use cases have been and the type of people we serve. One thing that I never knew about Bitcoin is almost all of our users aren't really from the industry. They're just normal people. And one of the most fascinating things to me is that a lot of people with Bitcoin don't actually have high paying jobs, right? I've mentioned this on the Pop podcast. It was that there's so many people that are using Lava right now and they have millions, tens of millions in wealth, and they don't even have like a high paying job. And I think that is so, I don't know if there's ever been this much of a wealth building opportunity that's been made available to people all around the world. That's Bitcoin. And I think it's just like really inspiring. And I don't know, there's something about it that shows me that you can make your way to financial freedom with just saving. And that's what Bitcoin proved. And, now these people, still don't really have high paying jobs, but they've used their Bitcoin for a few things. So we've had a ton of people that borrow against their Bitcoin to just buy a house because a lot of these people either don't have income or don't have a lot of income. So they don't qualify for a traditional mortgage. And not America probably has the best mortgage market in the entire world, but around the world, there's some places where it's just impossible to get uh like financing to buy a house. So we've had a ton of people, they borrow against their Bitcoin and just buy a house using the cash that they've borrowed. And one thing that people do in America that is very interesting is they have been able to use a cash offer. So if you do a cash offer, you can usually get a 10 to 20% discount on your purchase price, which is like, I think really cool. So not only are you keeping your Bitcoin upside, you're never selling your Bitcoin, you're getting low rate financing. You can also, and we help people negotiate this too, get a cash, like a discount on your purchase price. So that's been a
Mm.
big use case. There's some people who use us just for down payment financing. So one thing we did, we announced a partnership with Rome, which is another Costa Founders Fund company. There's a lot of homes in America that are assumable. So they have like very low interest mortgage rates right now, like 2-3%, right? But the issue with those homes is the down payment on them is much higher because you're assuming the liability, but you're also assuming the equity that person has built up in their house. That's a big constraint for Rome. But guess what? There's Bitcoiners who have a lot of wealth that they are able to tap into to fund that down payment. And we've had a few people, actually a bunch of people now that have actually borrowed against their Bitcoin to either buy a house, with our partnership with Rome. We also have a partnership with another mortgage company. And, we let them more than half their monthly costs on home ownership. So that home ownership has been a big use case. We've had a lot of people use Lava. We're going to release a product this Thursday. Maybe the podcast is not out by then. That's going to be called Lava Refinance. We let people refinance other higher interest rate debt using a Lava loan. So you can get, a very low interest rate, loan on Lava, lower than probably anywhere else you can get. And then you can use that to refi any other higher interest paying debt that you have. We've had a bunch of people buy cars using Lava because the rate is just lower to use your Bitcoin than to get an auto loan. Actually, a ton of people, it's like a few people have just bought Porsches. I think we've had 5 people buy Porsches, which is kind
I
of
saw one
interesting.
today. Yeah.
Really? Okay, I didn't see that one. I'll have to send me the link. But we've had some people over the last few months buy Porsches using Lava, and I think that's kind of interesting. I talked to a few of these people, and they're like, "Oh, I actually never had a high paying job. At least all the ones that I talked to didn't have like extremely high paying jobs, but they were like, I saved my way to this wealth with Bitcoin, and the Porsche has just been my dream purchase. And I don't know what it is
Mm.
about Porsches. I'm not like a big car guy, but I thought that was like pretty cool. It's a little bit more flashy, but I think that there is something pretty like, hype about that. We had people during tax season, we had a bunch of people pay their taxes using us. A lot of home renovations. I think home renovations is very interesting because I think a lot of people with houses, they've always like wanted to kind of do a home renovation, and then when they see they can borrow against their Bitcoin to fund it, a lot of people like take that opportunity. Some people have started their businesses using Lava too. So we've had some people. We have this one guy. He borrowed against his Bitcoin to start a sauna business where he's like heating the saunas with Bitcoin miners. It's really cool. There's
Mm.
this one guy. He started a coffee company using his Bitcoin as well and like borrowing against it with Lava. So yeah, there's like been a variety of use cases, and it's been inspiring for me, and it's been just very cool, like working at Lava and seeing that we serve so many different real use cases. I always thought there was only going to be like the trader use case, which we do have, which is people borrowing against their Bitcoin to buy more Bitcoin or buy other digital assets or other assets. But it's cool to actually see so many like real world use cases that people have used us for.
Yeah. I mean, it's beautiful because there's so much kind of dumb dogma in Bitcoin. For example, like people that just hodl forever, like that's what they say on the timeline. Like I'm just gonna be Ebenezer Scrooge until forever, and I'm gonna die with my Bitcoin. And it's like that's no. You should make your life better with your Bitcoin. You should be financially free with your Bitcoin. And it's similar with like making the smart key. It's like everyone's so focused on seed phrases, and seed phrases are great. Don't get me wrong, but they're not amazing. Like they have a lot of downsides, and they're not for the public person. Something as
I
simple
can't
as
tell
just
you how
like,
many Bitcoin OGs I know that have lost your money with seed phrases. Anyways,
hmm
but I think that what I would say is like you just said something that made me think about something else that I kind of keep saying is I don't think it's just all about saving. I think it's really about what saving makes possible. And I
hmm
do think that Bitcoin to me has really affected my view on spending as well. I think it has implications for how we think about consumerism. I think that consumerism is a very big problem in today's society. And I think Bitcoin kind of reshapes how you think about what you want to spend on. You start to really only want to spend on things that really make your life better. And so I do think that it's important to save, but you're right. Like it's not just always about saving. There are things that can genuinely improve the quality of your life and the quality of life of your loved ones. And that's what, we're trying to help people do, right? They have this savings. Let's help them make their lives better with it.
yeah, yeah. No, it's funny because I spend a lot of my time in the Bitcoin L2 space, which ends up being adopting a lot of the crypto mentality, and like so much of it, I think is just it's 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 stupid to put it nicely. Even prediction markets, like I'm sure they have a use case. Maybe it can make polling better, but like net, I think they're not good for society. But I feel like a boomer saying that. Like I do just want to save and stack my Bitcoin and then take a loan against it.
Dude, I saw the other day there was this app that some people have been funding that like you watch sports and you're like betting on every single thing that's happening. I'm like, I love sports. I love basketball. I'm a big basketball fan. But the best part about it is that it's just like a way to relax. And I think when you're like thinking about betting on everything, it's actually kind of like makes you a little bit more anxious. And I think it's really sad for me to see how much of the world, like there's just like gambling epidemic that's happening. And crypto is a part. I think, crypto coins have kind of like died at this point. I think a lot of altcoin stuff has died, but I think we're moving into more just like mainstream gambling, sports gambling, prediction markets, all sorts of other things. And I think it's pretty sad. I don't think it's good for society. I think Bitcoin, people sometimes put it in the same categories as crypto. And I think it's like the exact opposite. I'm like, Bitcoin's the maybe it's not the only solution, but it's part of the solution to this gambling problem. And I totally agree. I think that there's a lot of issues with all these other kind of technologies and platforms that are being created that are, making people poor. And I think,
And we call it innovation, which is crazy.
yeah, yeah. I mean, you look at the data and you realize that the average person, that not even the average, 99 point like 7%, 9% of people on these platforms are going to lose money over a 10-year period. And with Lava, our users have more Bitcoin, have more wealth now than they had before, right? Because they saved on their taxable consequences, they borrowed against their Bitcoin, they kept the upside. Bitcoin's appreciating 50, 100% year over year. Like that is like wealth creation. And I think so much of finance is just wealth extraction.
Yep. No, 100%. Okay, well then, I mean, we touched a ton on the benefits of putting your BTC to use through loans. And the other big thing you did launch this week is the Bitcoin line of credit, which I think we've kind of touched on, but why is this a big improvement and a big launch compared to the previous loan product, and what is it?
So previously, our loan product was more like a Bitcoin mortgage. So there was fixed terms, fixed monthly payments. You could refinance your loan, but it was like kind of a manual process. You had to click a button to do it. And what we really realized is that Bitcoiners have very unique income and cash flow needs, and they needed a product that was way more flexible. So there was just no product on the market that was giving them full flexibility on terms, however long they want to keep their loan open for, full flexibility on payments, like not forcing them into everyone into the same payment schedule, letting people kind of decide when they want to pay and giving them full flexibility on when they want to draw onto their loan. And then, also just giving them fixed rate. Like a lot of the products in the industry are actually variable rate. The rate changes like every single like second. And that doesn't really inspire confidence in people. Like it makes them, if you're going to go buy a house and you see your rate is like doubling because of like a block or something like that, you're going to feel a little stressed out, right? So this new line of credit product is really the safest, lowest cost, most flexible way to borrow against your Bitcoin. So it's open term. If you borrow, when you borrow against your Bitcoin using the line of credit, you can keep this line of credit open forever. So if you wanted to, we had this user who was telling me he's like an investor. He has a lot of Bitcoin, but he's like, I have these investments I make. I might want to repay my line of credit as some of those IPO and I can sell them. But until that happens, I don't want to be forced into this like monthly payment schedule, right? So now he can do that with Lava. He can kind of fund his life, fund even some of his investments, and then when they exit, he can pay down the line of credit, and he has like flexibility. So the open term nature, the flexible repayment nature really helps, and it's still fixed rate as well. And we announced across the board a 5% fixed interest rate. There's a 2% capital charge. That's the only fee that we charge at Lava. That fee is much better than like an origination fee or just interest because it's only applied once on at the end of your year on your max balance. So if you had just been like taking out or borrowing more over time, you're not like just getting fees charged on each draw or repayment. It's just a one-time fee on your max balance at the end of the year. So it's way better than just like an origination fee or interest because your interest that is accumulating per draw is the same over time, just fixed rate. So all in, I think it is by far the cheapest product to access liquidity against your Bitcoin. It is the most flexible. And I think it's like really the foundation of everything else we build. Like the way I view Lava is like borrowing against your Bitcoin is just the start of everything else we're going to do. It's like you get paid in Bitcoin, you borrow against your Bitcoin, you spend the cash that you borrow. That's just the start of all the other Bitcoin wealth management products that we want to build. And I'm just happy that we're able to offer the best one in the market. And we've had this as I've been talking like,
That was my next question was like, you guys just announced it on Monday. And I think you had a soft launch over the weekend potentially. How's the traction been since launch?
it's been great. We've been doing like, tens of millions of volume a day right now, probably even more. Like I think we'll be into on just the line of credit, I think we'll be soon past 9 figures, maybe even today. So
Huge.
it's been great. It's a lot of inbound. I've been actually taking a lot of one thing that a lot of companies in this industry don't do. and I think it's wrong that they don't do that, is they don't do client services. It's kind of like, oh, we built the software, just go use it. It's like, no, like we're like actually going to talk to you, because one thing I don't think people realize is when they're dealing with a lot of money, people want someone on the other side that they can talk to, that can kind of help and advise them. This is kind of the everyone's in real estate trying to get rid of agents, but what people don't realize is I think agents charge a pretty high fee, and there's like somewhat
Mhm.
like a monopoly in that market. But people want an agent. You talk to your average person, like they want someone to help them as they buy a house. With us, our average user is more sophisticated, but our average user isn't someone who's on like Twitter all day. Like the majority of users on Lava are just people who've been saving in Bitcoin. We had a bus driver the other day, uh, who's literally just a bus driver. He's been saving his way to wealth with Bitcoin. Isn't that crazy? We've had teachers. We've had a ton of people that are teachers that have been saving in Bitcoin. And it's like, these are just like normal people. I think this is where people in kind of the industry, I think, I don't know why it is. It's like maybe the most disconnected industry from its users. Don't realize that the majority, like, there's so many just like normal people out there that just want, that are just been saving in Bitcoin. I think it's really inspiring to me, because I've always wanted what Lava to become, is to be a mainstream platform where people are saving in Bitcoin and, saving their rate to wealth and using us to kind of manage their wealth. And it has been really inspiring for me to see that there's just a lot of people out there, people you just would never expect, that are doing that. And, I'm always taking calls with customers. Any customer, no matter who they are, I'm ready to take a call with them. We have a 24/7 available client service team. So we've just been swamped with a lot of positive inbound. We've been talking to users, helping them through the product if they ever have any questions. We were ready for this. We expected that the line of credit launch would get a lot of inbound. So, uh, we've been dealing with it well, but it's just been really exciting to see. And it's just like a fun time to get a lot of inbound and talk to all these excited customers, and be able to serve them.
Yeah. No, first of all, shout out Harper, killing it on the concierge services.
Harper is great. Have you been talking to him?
I mean, forever ago, I needed help, and he handled like a boss. I see him on the timeline doing shit, helping people out.
Keep this in the video, and I'll clip it. I'll send him the clip of this then.
He's gonna repost this daily forever. Um, but no, and it's true too. Like we get so focused on tech. And I guess trustlessness is a extension of this, which is like, let's just code everything. Is that like buying a house, for example? It's the biggest purchase someone's going to make typically for the average person. And they're going to do that through what? Like Tinder swiping left and right and like doing it all through their phone? Like, no, that's stupid. Of course they want to see it in person. They want to talk to someone. They want to, are you sure this is what I want to do? Do you know anything else I can do? So that human touch is definitely lacking in crypto. Also, by extension, I think that people confuse Bitcoin Twitter with Bitcoin, as you mentioned. Like, there's so many people who don't give two shits about op returns or the next software upgrade at all. So it's refreshing that you guys are just, it shows that your guys are thinking practically through a lot of these things, which is lacking. I think a lot of these they're more ideological than practical when it comes to building.
Look, I don't even know what the op return drama is. I haven't even followed it. I think 99 point like 5, maybe almost none of our users really have to. Like, I think if you ask them, they're like, "What? Like, what's going on here?" Right? So I think, I don't know why. I think there's not maybe been a bunch of maybe practical use cases that have come out of this industry that aren't gambling. And so, I'm just happy that we're able to be one of them. And I'm happy that to just, I think before Lava, it wasn't really even like clear to me that there were all these Bitcoiners out there. You just see the people on Twitter and all these things. Like, it wasn't really clear to me there were that many Bitcoiners out there that were just using it, that weren't plugged into this, echo chamber. The most surprising thing to me is that how the majority of people are like not plugged into this echo chamber, and they are just like saving in Bitcoin. I think that's actually a good thing. Like, the thing about Bitcoin is there's not much to talk about. It's like very simple. What it is sound money. It's money that no one can debase. It's your money, and it is the best savings asset in the entire world. And it's inflation resistant money. It's like, that's all you really need to know. And if you're going to save in an asset, you want to save in an asset that no one else can print and create more of. It's like a very simple way to kind of understand what Bitcoin is. And that's all you really need to do. You just get paid in it. You save in it. You use just Lava to use a Lava BLOC to get cash against it. And you spend that cash on things that make your life better. And it's just like a very simple financial experience.
Yeah, yeah. It's such a small, like, something I've been saying a lot in my regular life is that social media is not real life. Because like if you're on Twitter, you're like, Memdani is gonna make New York burn in hell and all these things. It's like, no, probably not. I think it's gonna be fine. If you get off social media and stop being a lunatic, everything is okay. You go to the grocery store, everyone's nice, everything's Gucci. Um, okay, I wanna pivot into some of the kind of like hubbub on the timeline, but first, anything that I missed or that you want to close out on as we transition into the next topic?
No, no, I think you're doing a great job. I think we've
Okay,
covered a bunch of stuff.
just just checking. So yeah, Monday you announced the fundraise and the Bitcoin Live credit, and I think over the weekend there was an upgrade process, right? And I think that's what starts some of the issues here is that there's an upgrade process and people were under the impression that the old loans product was self-custodial, quote unquote, which we'll get into, and DLC based, and this new one might not be. So there's a lot to unpack, and we'll get into a lot of nuance here. But let's just start there, um, and like frame it up.
So over the last 3 years, our technology, we started with like DLCs. We were also kind of doing it uniquely using like atomic swaps. Over time, we discovered, issues with the technology. There's even certain vulnerabilities that exist. And our tech has actually changed a lot over the last 3 years. You know this, as an investor, we've constantly been upgrading our tech. We've always communicated it to users with every software, kind of release like, hey, what's changing, why it's changing. In a way, like the technology, our goal has always been we have this like product experience that we build, but the Bitcoin is irreversible money, right? So we need to make sure that the technology, the security that powers it is foolproof, it's secure, it's risk minimized, it's exploit proof, right? So there's been a lot of things that we've done over the years to really make the technology more safe. And we've always tried to properly communicate it to all of our users. That's why we have this like client service motion as well. People can always get in touch with us to kind of understand what's going on. We communicate it through people with email, social media, and directly. And I think recently there's been, I posted a bunch of stuff around it on like Monday and Tuesday and kind of like where our technology has kind of changed. So like we had this whole like DLC kind of technology in the past, and really we just realized it wasn't secure enough for what we wanted to do. And I think, you and I can go into this. You and I have spoken about it a good bit at this point. So let me know if you want me to start speaking about it now or you want to like have me clarify
Uh,
anything.
so I think what would be good to maybe preface is you have a GitHub that has different white papers. There's a Lava Loans V1, 2, and 3, correct?
And there's been, lava ones 1, 2, and 3. I mean, I don't know if that GitHub is even live anymore, but as you can see there, the tech has changed multiple times. And even past that, it's been changed. The implementation has changed. And I think this is where I think what people need, I think the way people kind of view this industry, and we realized this too. In the beginning of Lava, I personally thought about all this stuff very binary as well. And I admit my fault there. And I was also engaging in this like trustless, I think like theater in a way. And I really realized at the end of the day, in a software product, you kind of have to, in a financial product, you have to kind of evaluate trust holistically. I think a lot of this industry thinks about trust very one dimensional, right? Our goal still is to build, the safest, the most trust minimized, the risk minimized, remove counterparty risk, increase redundancy, create fault tolerance, like all sorts of things that make your product safe and secure. You don't want North Korea being able to exploit your users, right? You want bad actors not to be able to confiscate or steal user funds. I think a lot of this industry thinks about it very theoretically, not practically, thinks about it very one dimensionally, doesn't think about it like very multi-dimensionally. Uh, and for us, like we didn't want to, I just didn't feel like I felt like I was wrong and I just didn't want to play like trustless theater. I didn't want to like lie to users saying that this is all trustless because it's not. There's things that are more trust minimized about it than others, but where there is trust, we want to lean into it and build that trust, right? One thing I always tell people is Lava was made by North Korea. Would you use it? If your like ledger or cold card was made by North Korea, would you use it? Right? Like, I think most people would say everyone I've asked that question to says no, which kind of implies implicitly there's like some levels of trust involved. And we're in a product you use, where is the trust involved? Especially in like any app, it's involved in the hardware that you're using to interface with the software. There's software that's running on your phone as well. There's trust involved there. There's likely backend infrastructure and like all these processes that are there to kind of upgrade that software or even run software on the backend. There's trust involved in all parts of the stack. What you want to do is figure out where are the vulnerabilities and try to like mitigate them, right? But holistically, right? So the old product, there was a lot of risk actually around just having like seed phrases and stuff client side, right? And keys and even software that was managing those keys client side as well. Right now, our new setup We use cold storage across the stack, so it's really secure, not internet connected. There's no client-side malware. I think it just makes I think that's a big trust factor, just like client-side malware that is just completely removed. We've seen in crypto, not just Bitcoin, over the last few years, a lot of that technology has gotten exploited, right? So a lot of it for us has just been, okay, what is the best cryptography? What is the best software? What is the best process? What's the best DevOps, infrastructure, security? What's the best technology that we can use that we feel the most comfortable is going to protect client assets?
Yep. Okay. A lot to get into. I'm taking rigorous notes over here. I want to start with maybe the more thorny and direct question, and then we'll back into terms and nuance and these kind of things. As far as I could tell, the thing that's got people the most up in arms is they feel like when they hit the upgrade button, the custody model changed. That's the implicit assumption right now, is that it went from something like a DLC that's self-custodial-ish to something like maybe it's in BitGo now and it's safe because BitGo hasn't been hacked. So you could
Well, It's
say
not
it's
using
just
it's not using Bitco, by the way, but
and I'm just putting out terms, but like I think that's the feeling, is that the button was too easy to press for what's happening in the back end. So let's start with that more difficult one, and then we can dance around.
For sure. One thing I'll say is if we didn't communicate things properly, that's on us, right? We take full responsibility. I've always wanted to make sure that we communicate things properly to people. If you look at the data though, like from our users, I don't know how, I think our volume actually, our users, we have more than 100% retention on a volume basis after upgrades that we've made over time because just the products has gotten better and users have upsized their volume with us. And I feel like a lot of people that are on Twitter that are talking about this, I look at it, I'm like, they're not even users. So they don't like they're complaining about things, but they weren't users. And any upgrade we've done, you've actually had the opportunity to decline it. Like we still have people on the old app right now. So like there's stuff here that I can communicate. Like, if you don't want to use an upgrade, you can decline it. But we can always communicate things better. But the technology, I think this is where I think people don't realize this as much as well as anytime you use software, every time you upgrade it, the tech changes. And so we've always tried to kind of communicate the tech changes, but there's a lot of tech that is involved in building any product, right? So anytime we ship any upgrade, the technology changes. And we just try to be very clear about that with people. And a lot of it is though that a lot of our users don't even think about the technology that they are using at the end of the day. Because what people really end up thinking about when they use a product is like the product itself, right? I think it's really hard for people to really conceptualize the technology that's involved. And for us, we realize that places a lot of trust in us as developers, right? Because we're developers of this technology. We are constantly making improvements into it. And this is where we wanted to lean in as well and say, okay, we know that you are implicitly placing some level of trust in us as developers for this technology that we are creating that you use. A lot of the point of my post was like, let me lean into this and tell you guys, like, I'm going to lean into this and build as much trust as possible with you instead of trying to make it feel to you that it is some level of like fully trustless thing when it's clearly not, because you're effectively always trusting developers anytime you use a product, right? And it was a lot of my focus and kind of vision for this, and what I've been trying to always communicate to people is like, I'm here. I'm like I know that you guys trust me, and I want to build that kind of relationship and trust with all of our youth over time, if that makes sense. Instead of just like kind of hiding away from it and hiding in jargon and honestly like confusing users. Cause when people like would talk, they're like, dude, like I'm using software that you guys are creating. Like, why are you kind of marketing this as this thing that it's really not, right? Because all software at the end of the day is trusted. There's so much supply chain, hardware, firmware, software kind of risk, right? And so I was like, yeah, it makes a ton of sense. Like we really shouldn't be hiding in this. We should be like kind of like leaning into it where it's there, and where we can kind of remove counterparty risk and trust. Let's remove it there while also making sure that we don't introduce exploits as well, right, into the system. Like let's make sure we have the most hardened system, especially in today's age where like Monday you saw like the balancer hack, right? Like it's like maybe the
Yeah.
most audited like DeFi whatever protocol on EVM. It was like a massive exploit. And, I've been saying, as you've known me for years, saying like a lot of this technology, you're just trusting that North Korea won't find exploits in it, right? Like the software is, you are trusting this like smart contract, whatever software, and there are exploits available in it, especially just given the nature of how that tech is kind of written and the frameworks that it runs on. There's a lot of trust. And I think that, I think some level of just wrong marketing that was used to kind of market that product as well, where people thought coming into it, it was like trustless, riskless, whatever. And it really isn't,
Mhm.
right? There is trust into it. You need to really properly communicate that and build that trust with people.
So a couple things. One, I do think it's interesting that actual users versus talkers in that timeline. I mean, you have the data. That doesn't seem super foreign to me. Tech people want to debate about tech things, and people who have Bitcoin want to take out a loan and go live their life. Also, the Korea trust question is interesting because it does imply that there's an inherent reputation part of trust that we just overlay on everything, and I think that's true. I think that's inherently true, even though it's not how we think about trust when it comes to Bitcoin and code and these kind of things as far as ideology. I wanna double click one more time, kind of ask the same question, which is that the issue I'm seeing is that people think when they hit that button and they had 4 lines of text and the easy button, the custody model changed. So does that hold any water, or because that transition from V2 DLCs to whatever it is currently, there's a chasm here that's happening in the conversation, and I'm trying to figure out where's the breakdown. So did it happen at the recent button press? Was it earlier? Help us uncover that.
Right. So we've shipped hundreds, thousands of updates, right? And throughout that process, each update had at least a part of it that was probably reducing some level of trust, improving security in a way, right? Probably releasing a feature, doing some other thing. I think, obviously the technology has changed throughout a lot of these type of upgrades, but we've had multiple of these over the last 3 years or so. We've had multiple upgrades that are like this. That screenshot people are taking is also, I think, a bit disingenuous because there's a lot of explanation that was done prior to that as well. And there was always a way for people to kind of like opt out of it. But I think, yes, the technology changed. I'll take that and say, yes, the technology changed. There's never been like early repayment or closing out fees in Lava, right? So we've always made it really easy for people to either opt out of it. People are on the old app right now, or if they opt into it, close out their loan if they ever wanted to. But the technology for us will always change, right? Like this is like a multi-decade kind of thing to kind of figure out what is the best technology to kind of enable Bitcoin wealth management. Like our tech will all, we want to just make a commitment that we're going to use the safest, most secure tech, but we will, and we realize that that involves people, placing some levels of trust in the product and in us to really figure that out, right? That's why we really lean in hard into building reputation amongst ourselves as people, into our backers, into all sorts of things. And I think this is where, the North Korea example is kind of interesting. It's like there's so much stuff in this space where I think, we've actually had a lot of users and they're like, wow, I didn't realize, like, when we've been kind of communicating this over the past few months, they kind of started to realize, well, these other products that I was using that I thought were really trustless were really not, right? Because then they start to think about it. I'm like, oh, I'm trusting like the supply chain for this hardware that is shipped to me, which I'm using to kind of manage my money, right? Oh, I'm testing like this firmware upgrade on this like hardware device that I'm constantly installing, right? I'm trusting this like software wallet. I don't know if you saw like the JavaScript vulnerability that was
Hmm.
made a lot of companies like I think Ledger, Trezor, and a few others vulnerable because one thing that's kind of important when you build software, and this is why I think security is so multidimensional, is there's all these like dependency packages that people use when they build software. Like one thing you really want to do is like lock down your dependencies, have proper dependency scamming, have proper audits and controls before you release everything. That's what we do. Some companies didn't do that. And the whole vulnerability was like the deposit address could get swapped out for an attacker's address, and people were like, "Oh, I didn't know this risk could exist," right? And you're like, you use this thing, you're like, "Oh, is it trustless?" No, you'd still trust the person at this hardware company to ship the right software to your device, right? And so, and then outside of that, there's been all sorts of other wallets and technologies that have been created over the last few years. Some of them have even like back end kind of technology that's been created, right? And a good example of this, there's this one that's has like a back end key, a client key, a hardware key. I'm like, okay, but there's definitely some levels of trust involved. And I think that what a lot of this industry has just really like looks at the trustless data very theoretically, and then when you actually build something practically, you kind of realize like how much trust there is involved in the entire process. And I'm not like very pessimistic about removing trust. I'm just very like where there is trust, let's lean into it and let's build trust. Where there is not trust, where there's ways we can remove trust, let's get it out. Let's take counterparty risk out. Let's increase redundancy. Let's decrease let's create fault tolerance. Let's do all these things, but let's not ignore that there is levels of trust involved in all parts of the stack, right? Does that make sense?
No, it's really good, and I wanna get into this trustlessness, non-custodial, self-custodial in a second. I had a bunch of questions around DLCs, but as I'm talking to you, I actually don't think they're that useful. The last question I wanna ask about it, though, is that people do draw a bright line around DLCs, meaning they feel like I'm okay with the trust assumptions because I know it's a 2 of 3 with an oracle, and I just hope that the oracles, they've hardened their security to make the oracle robust, but it is a DLC, so it's on the L1, etc. At what point did you guys phase out DLCs? I think that question would help people to kind of separate when this feeling that the custom model changed actually happened.
I mean, it depends like what software people are still running today, right? Because some people might be running old software, right? So it's hard to kind of like give a distinct timeline because it depends on when people have like upgraded their software versus not upgraded their software, right? So we've been pushing upgrades over the past few months that people have upgraded to models that are not DLC. And I think you mentioned a little bit about the trustlessness thing about DLCs, and I think that is very interesting too because at the end of the day, if you're a user, you're obviously there are vulnerabilities to DLCs. There's vulnerabilities to oracles. This is even if you look at my white papers, I made these like very very clear, right? And when you kind of implement them in practice, we started to realize well, there's actually way more vulnerabilities than we had realized, right? There's some projects out there that still use DLCs. Some we're not gonna like go publish all these right now, but we will publish them. We just realized there was just a lot of issues with the technology. I wouldn't go ahead and say like I don't know if it's exactly fair to say that it is different trust assumptions because we think the trust assumptions are, and the security is just like way better right now. But we've been changing our technology over the past few months. I think since over the past 5 to 6 months, technology has changed quite distinctly. And even over the past few years, right, the protocols have changed from V1 to V2 to V3. We had several adaptations of V3 over the last few years. The technology is like always changed. Right now, we don't use DLCs at all, but we do have some people running old software. So I guess they're still kind of on it.
Got it. So it sounds like if someone's an early adopter to updates, at least a few months ago, you'd be pivoting off of DLCs into the newer model, whatever that is. So how should people think about the current custody model? Because that's the next logical question that happens after they think about no more DLC.
Yeah, I mean, right now though, everything is like cold storage. We're gonna release a lot more details about it later, like over the coming weeks. I think there's a lot of things that we've done now that are making things more secure. So there's no like client-side malware risk. Like one of the biggest problems with just even using anything is like in crypto is like you want to make sure your client-side hardware isn't isn't compromised, right? And so that was a big risk. I really never felt comfortable in like we as time progressed, I realized that was a really, really big risk. And even the supply chain to ship someone, just like a crypto only hardware device is, very vulnerable in my opinion as well, especially after learning more about it over the last year. So I was like, okay, well, we really need to build some type of technology where there is no client side malware risk. So that is, like how our system works today. Everything's in cold storage. We have our own, like, vertically integrated tech that we've built that we feel really secure and confident about, and we give users guarantees around no rehypothecation. We're gonna have audits that we're gonna publish. We can also give people independent on-chain addresses still if they want that as well. We also Lava is now like we do a lot of things. So it's we do like fiat on ramps. So we're literally touching fiat at times of so the Lava is very multidimensional in a way, right? We're doing fiat off ramps, we're doing fiat on ramps. We're about to do bill pay. Bill pay is kind of this technology where you can get a bill and if you opt into it, you could like pay your bills through Lava, right? So it's become very multidimensional. It's definitely, there's trust involved in Lava throughout the process. So we're not leaning into it, but our tech is all like cold storage, all on the money movement side now.
Okay, perfect. And you guys will drop more stuff in the future. So when that happens, I can update the description here. Okay, couple last things. We've been waxing for 54 minutes. This has been a great convo. I think the last topic I want to touch on really is kind of like we've been discussing it as like a kind of like broad theme of like trustless theater, trustlessness, non-custodial. And a lot of this becomes kind of narrative based in my opinion, because you see like Spark is doing very well right now in mindshare. And it has a very clear trust assumption of key deletion for the operator. and people just assume like, okay, I respect Spark and David Marcus and Lightspark, so I think they'll be good actors. Going back to that, reputation based trust. So, how do you want to kick it off? Like when it comes to definitions and terms and how people think about these things versus someone who's built it and trying to build practically. Uh, yeah, what do you think about this topic?
I mean, look, like I'm not gonna go out there and like properly call out all the trust vulnerabilities in anything someone does because like we respect the people that are building in this industry. And I think, look, like there's no product I've seen that lets you interface with Bitcoin. The only product that's fully trustless, I guess, is Andrew Polstra showed me this thing. He has this book that he has where he like creates the public key from scratch. He has like all these like dice that he rolls and then he kind of like derives like this like public private key pair. And then he's like, he told me one day, me, Greg Maxwell, and him were in San Francisco few months ago and we're like, this is the only way to like really never rely on anything else, right? Because you are doing that. Obviously there's still risk involved, right? Because now you like have to store this like string of information. Maybe you can just store it in your brain. Maybe that's what like Greg Maxwell and Andrew Polster does, right? But whenever you're using a proper financial product, there's so much trust. Like there's trust involved in everything across the stack, right? So I think a lot of people hide in it. I think it's fine. I think, security is not just, well, it's not just that. It's part of it, but there's a lot of stuff to security, and I think this industry will learn over time. I think it's only been like 17 years since we started, even like Bitcoin just started. So I think the trustless theory stuff. I think a lot of it's going away. Actually, I would say like you look at like blockchains shutting down, DeFi protocols that are supposedly like DeFi getting hacked or having upgrade authorities, or you have all these like roll ups with security councils. And then you interface with these things. You have these like wallets that are you have to interface with, and this hardware. You see like hardware wallets getting compromised nowadays. And you're like, okay, so you people are starting to realize like, wow, there are levels of trust to everything, right? And like with Lightning, you have this backend kind of node that's running on hardware that, is maybe AWS hardware or whatever it is, right? So and maybe like every product is a little bit different, but every product has some trust assumptions. And I don't think it's bad. Right? There's nothing wrong with that. Like there's nothing wrong with like every product having some level of trust assumptions. It's literally impossible not to have some of that. I think people should just like kind of lean into it. And I think users inherently do like think about it. Like they do think, oh, who built this? Like, why do they build it? Why do I trust the software? Why do I trust this hardware? Why do I trust any like Oracle or backend or other infrastructure that is used to kind of power us? I think users are kind of thinking about it in this way. I think some of the marketing that people do is just wrong. And I think users get confused a little bit. But if you actually talk to real users, like they do, like, kind of think of it in this way. And I think it's totally fine. I don't think there's really any problem with it. So I don't really have like much problem with what other people are doing in this space. I think overall, I think there's different technologies. They all have their own use case. And I think at the end of the day, what the industry probably could get better at is like marketing, really at the end of the day, what the benefits are that a user gets when they use a product that you have, right? I've always been really like inspired by like Steve Jobs in a way when he was always, if you actually like look at someone like Steve Jobs and how he marketed his products, he always made you think about like the why. Like, why should I really care about this and what? And I think he never talked about like the tech in a way, right? Because he was like, okay, that's not something users care about. It's not something users can really even like verify fully, and it's doesn't matter what matters is the why behind it. And so there's a lot of stuff we're going to do where we'll obviously be transparent around everything we do around security and all these things. I think that's super important, especially as they deal with money. But a lot of it's also going to be like, if we do something that makes security and transparency better, we're going to have to communicate to people why. Like, why does this matter for you, right? Why did it not matter for you when this wasn't the case, and why does it matter for you now, right? And I think that's a lot of the why what I try to get across in our marketing message.
Yep. No, that's a good answer because it's nuanced, and it's a bad answer because it's nuanced, which means it's probably close to reality. I guess one more question on this topic, which is where do you draw the line on what is practical trustlessness? Because, for example, Bitcoin is not trustless because there's already an honest majority for miners, for example. So it kind of depends on when you want to draw, like, stop thinking about it. And so one is that, like, we assume they're honest. But on the other side, like, there's a big gap with, is BitGo trust minimized? Well, they secure billions and they've never been hacked. They never lost funds. But many people say that's fully custodial and very high risk. So,
I
like,
think
where do you
I
think
think
the rubber meets the road?
this kind of reminds me of like, do you remember all those like conversations and like 2017 to 2019 around like Bitcoin was a thing, and then you have all these altcoins. And it was kind of interesting because what you had is effectively like everyone in the altcoin ecosystem, a lot of their narratives was actually around trustless theater to promote their altcoin. It was like Bitcoin's not fully trustless because of this proof of work thing. We're gonna make this proof of storage kind of system, or what I don't even like so long ago. I don't remember even thinking about. I don't even remember all those things that people said back in the day. But do you remember those? Like there was like all these like blockchains and things that were kind of created, and a lot of the marketing, all the marketing they did for themselves was around like trustless theater around Bitcoin. I don't know if you remember all of
I was
these.
here.
Like,
I got here in 2021, so I think I was late to the game.
yeah, yeah, maybe 2021. I think a lot of that did stop. But what those projects didn't realize is Bitcoin had the product. What is Bitcoin's product at the end of the day? Inflation resistant, fair launch. I think fair launch is really, really important, by the way. Like Bitcoin's product is insanely hard to replicate. It's fair launch, hard money, the halving cycle. A lot of Bitcoin's value also comes in like the mimetic nature on it, right? Like everything that happens. Satoshi putting Chancellor on the brink of bailout on the first block, like being anonymous, like never using his coins, fair launch, proof of work. Like there's a lot of parts of Bitcoin, that the technology matters to some extent, like the peer-to-peer nature, the proof of work nature. I do think it's better. It's better for certain reasons, and I think that makes up like the product of it, right? And the product, I think, also kind of matters. Like, okay, what about proof of stake? And proof of stake, the rich just kind of get richer, right? Whereas with proof of work, it's like a more fair system. I think there's also but I think that's part of the product. Like you don't want this money. We're building sound money, right? We don't want a money system that has this like contagion effect with like insiders and with like just like the people getting like the stakers just getting richer and richer, right? So I think there's like values of Bitcoin. Like why is that important? Why is proof of work important? It's because it really is the fairest. It enables us to create the fairest money, and I think that's what made Bitcoin so successful. Is it's really like the wise. Yeah, I think what you're asking me is like, where do I draw the line? I'm like, there's no line. There's a bunch of
I
vectors.
reject the question.
I think the point is there's just a bunch of things that you have to think about when you think about decentralization, trust, trustlessness, whatever you want to call this security. It's so multidimensional. There's all these like I kind of view it as just like there's a bunch of vectors. You think about all of them. You think about the ones that are really important. You prioritize them. You get rid of the ones that create vulnerabilities, and you're never going to get something that is you're right. Like I think Nick Szabos did this the other day. He was like, Bitcoin's not trustless. He was like, and I don't know what Nick Szabos is up to. I know he's been tweeting a lot on Twitter, so I think he's been saying so. Like I know people are getting really aggressive at him, but he's like an early OG of Bitcoin, and I think he's right. Like there are things about Bitcoin that I'm like, we should be thinking about them more, right? So, for example, mining is a risk to Bitcoin. It is a trust factor. I think if you look at it practically, right? Okay, so just think about this in a way, like if there was a world where there was only like someone creating one Bitcoin miner, that is a massive trust vector, right? What if the cost? Okay, one thing I think is very interesting is the world doesn't have to be this way, but it is that energy is the most distributed resource on the planet. Capital is actually way more concentrated than energy. But in a world where energy, all the world's energy and free energy was just in one location, Bitcoin probably wouldn't work that well because
Mm,
like mining would then just be in that one location, right? So it would be very, very trusted to that one location because economically it wouldn't really make as much sense to run a Bitcoin miner anywhere else. Does that
yeah.
make sense? Like think about
No,
if like
totally.
entire honeypot of like energy was in one location. So there's like there's like this like theoretical kind of like concept of a protocol, but when you go into practice, you kind of look at the actual practical implications of it, right? And there's so many other examples I have of that I could kind of point to. I know it's getting like more than an hour on this podcast, so maybe we can have a whole other one just discussing like trustlessness and how I view about it. But I think even for Bitcoin, like you think about it practically, we have things we need to consider. But I do think in general, like the way the world is set up to be, energy is very distributed. That is really, really good for Bitcoin mining. It makes it more trust minimized and but it's a spectrum, right? Overall. And I think that's why I think that there's some really good people. Like I'm super impressed with like what Jack Dorsey and really himself and the BLOC team did with they've made these like new miners that are really cool. I think it's really good to see like competition in that space, right? On just like Bitcoin mining equipment. I thought that was like super impressive. Hard to do, by the way, and super impressive. I was talking to some people on their team, and I think that's important for them to do, right? Because if you just thought Bitcoin is trustless, like why are you building mining equipment? It's not going to be like a massively profitable business for them. but it's important because it does create more optionality and it is a trust vector. And we kind of think about that trust vector and we try to like figure out ways to kind of improve on it, right? And so even with quantum cryptography, right? I did a podcast or a spaces. I had Taj, Clara from Chain Code, and a few other like quantum researchers on the podcast. And it's like in a world where there was this technology at this level, which is not impossible by the laws of physics, and would not be very safe to use today. Obviously, that technology isn't there today, but there are ways for us to mitigate that. That is a trust factor. We're trusting that the cryptography isn't there today. They're trusting that the software is resilient to it, but we still have to think about that trust factor because if we don't um, think about it and the world gets to a state where that trust factor becomes a little bit more possible to exploit, then we're going to be in trouble, right? So we kind of always have to be. Even I was talking to Mike from, which is one of the best Bitcoin nonprofits in my opinion, and there's all sorts of things the developers do in Bitcoin Core that I think people really really don't respect them. I know there's been a lot of like hatred towards Bitcoin Core recently. I personally haven't been like following that much, but there's so much that they do to just make sure the peer-to-peer protocol is working as expected.
Hmm.
Like there's just so much that is done, and just viewing it so binary, honestly, it's like disrespectful to all the developers that work in the system, right? Because there's so much work
It's a
to do.
thankless job for sure.
Yeah. My main point is like, and I think it's here. Look, here's what I'll say is like, if people view it as binary, I don't think it's the end of the world. I don't think it's the end of Bitcoin. Like actual users are still just going to save in Bitcoin. And I think I'm so optimistic about Bitcoin's future. So it doesn't like, I don't think it's like makes me feel pessimistic about Bitcoin's future if people think about it as a binary, but I know some people do. So this is just my way of like getting this information out there. And, I'm obviously happy to engage with anyone at any time and kind of explain more in Jam because they were all kind of trying to search for truth. I think we're all kind of wanting the same thing, at least in the Bitcoin only land. Like we want people just to save in Bitcoin and grow their wealth to grow their rate of financial freedoms. I'm just like happy. I think there's a lot to kind of think about with that.
100%. And you opened like 17 rabbit holes that we'll have to go around two on. Um, so let's close this down. We started by talking about all the cool shit you guys are building and have
Yeah.
built and the people you're serving. And then we got in the weeds around the current stuff. What are you guys building? What are you excited about? Where are you guys heading? Let's end on a forward-looking high note.
So I described a bit about what you can do at Lava today. You can get paid. You can get your paychecks at Lava. It's a very big deal for us that people are doing that. We offer that to people around the world in a few currencies though. So we're expanding currency support for that. Like we want to be available everywhere. We're working with banks all around the world and payment partners there. The line of credit is the rates will come down over time. We're working with more and more banks to just lower down the rates, even more lower than where they are right now at 5%. But that'll keep happening. Our capital team's working on that. We have made it really easy for people to withdraw their cash money that they borrow against their Bitcoin on Lava. But one thing we're doing right now, it's in beta, and I can talk about it. It'll be out for everyone pretty soon. Is the card. So basically, we have this card. Anytime you swipe it, you get Bitcoin rewards back, and it's just not gonna have like some weird like complicated like points and all this other. They kind of like BS. Like we don't want people to like do like card optimization. We're just gonna take all the money we make and just give it back to you, honestly. So, but it's gonna be really cool because anytime you swipe, if you were all in on Bitcoin, it can just draw on your line of credit to fund your purchase. So you could live all in on Bitcoin. Your merchant doesn't change your behavior. Your employer doesn't change their behavior. You get paid in Bitcoin. You spend. You sell as little Bitcoin as possible. You grow your Bitcoin wealth as much as possible. I think it's a very like cool product. And then there's a lot of stuff we're doing. Like we have people. I'm not gonna like talk about these services too, but Bitcoin wealth management. Bitcoin is the most important asset in the world. There's a lot of things people want to do with their Bitcoin: buy homes, buy cars, pay taxes, do all sorts of things. We're gonna just build like the most the best suite of software that lets people do Bitcoin wealth management. Like there's so many things that we can build, just hyper focus on Bitcoin. One thing I think about in this space is like people a lot of times what people do is they vertically integrate across all the coins. So like what all the like I think like competent
Mm,
companies have done is like you take Bitcoin, you let people buy and sell it, and then you just go vertically integrate across the spectrum of all the digital asset to where people are just trying to become like the everything exchange. But what people don't realize is like the importance of everything but Bitcoin is just so much less than what Bitcoin is. Bitcoin is like only financial asset that matters for 99% of people. So what we're doing is like we're vertically integrating just throughout Bitcoin. Anything you want to do with Bitcoin wealth management, we want to build software and services that help you do that. So we should maybe circle back to this in a year. We're just going to have, our shipping is just better, faster, with more quality than any other company in this space. And, we don't use some of the other companies in the space as competitive. Like there's some companies out there that we're going to be partnering with that, are companies that Bitcoiners love that have unique products. And, we're going to couple them together, build even cooler products together. So everything that we build will just be for like that purpose of Bitcoin wealth management though.
Huge, huge. I'm waiting for the lava card. I thoroughly enjoy my Coinbase card. Being able to swipe and see my BTC rewards accrue is fantastic. Having to go into Coinbase makes me a little sad, so it'd be dope to be able to do it in lava. Man, this has been a fantastic episode. We crushed an hour and 10 minutes. I think we covered a shitload, so hopefully people enjoyed this. I'll have links for your Twitter bio and lava and everything else in the description. But always good to chat. Appreciate what you're building. So thanks for coming on the pod, man.
Dude, thanks for having me on.
Is gone up. We playing the long game to the black rock chains with the rocks paid off from the blockchain. Going up high octane, so we up in here like pomade. Making big noise, big money, go play with your kid toys. You funny, I'm counting my Bitcoin. We up and we been gone. It's gone. Planned it out and we did this purposefully. Panning out like the kitchen currently. It's like surgery, way it's earning me a nurse's salary for cryptocurrency. I'm on a vacay drinking coconuts while wearing polka dots. This ain't no hocus pocus. Listen up and learn. It's gone up.